Well, I think there's a lot of caution in the markets at the moment. Market action is sort of whipping around in either direction as traders try to position. But I think from our perspective, inflation hasn't gone away. The cut by the Reserve Bank of Australia being less than was expected is not necessarily the bullish sign that people have treated it as being. And our working assumption is that inflation is around, interest rates are going to continue to see upward pressure. And businesses, which obviously do not reposition at the same pace as the markets, are expecting to see further declines in consumer demand. So we have to take a rather longer view and position ourselves for companies that we think are going to be winners. So when we take, for instance, having a look at the tech space and the chip makers, we can see that companies like Micron and Hynix in Korea and Samsung Electronics have been scaling back chip production in response to expected declines in demand ultimately for their products. But nevertheless, there are winners within that group. And so Taiwan Semiconductor, for example, is seeing less pressure. And so it is about selecting those businesses that are best positioned in what is ultimately a weakening set of demand conditions.
You mentioned some of those external weaknesses and how it's played out when it comes to some of the shipping services and some of those big manufacturers of devices. But are we just scratching the surface now in terms of some of the weakness? Because we haven't fully seen some of those interest rates bite. What could lie ahead from some of these early warning signals that we had from the companies? And I think FedEx, for me, really was the standout.
That's right. FedEx was also, for me, a key point, and we also see that Meta is positioning itself. Apple has reduced its demand outlook. Amazon has scaled back some of its distribution network and expansion plans. So it is a case that there is a sort of lagging effect. When we have a look at the forecast growth numbers, it is next year that we need to be looking really for those to come through and begin to materialize. But for businesses, it is about positioning into those that are, say, largely self-funding, either generating sufficient cash flows for investment needs, that they are able to capitalize on weakness elsewhere, particularly against their weaker competitors. And so we have to be very, very selective.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.